Welcome, traders, to another Tickmill trading update with me, Patrick Munnelly. Want to update the SP500 view using the continuous front month Emini futures contract and put together a trade plan for the week ahead and identify some high probability action areas and price targets that we can expect to achieve. So last week, S&P 500 was down 2.4% for the week after putting in a new all-time high. Also putting in new all-time highs were information technology, industrials, and utilities. For the week, only utilities ended up positive on the week. Last week, healthcare and energy were the only two sectors that remained in correction territory. This week, consumer discretionary, materials, and real estate joined the two others back, also now in corrective territory. The S&P 500, as I say, closed down on the week 2.4%, tested the 21-day EMA for the first time in a while. That comes in on the SPX at 62.83 and closed below there for the first time since April 23. What we have in terms of market breadth, the declines of the past few days at the back end of last week mean that the components of the market breadth indicators now have shifted significantly. So on the 20-day look back, we have 36% of stocks closing above there versus 69% the week before, so a significant downdraft. The 50-day moving average, 49% versus 73%. And the 200-day moving average, 53% of stocks closed above there versus 63% from the week before. So the market really has pulled back significantly, and those divergences that we talked about in prior weeks have finally come home to roost, and that led to the pullback that we saw into the back end of last week. In terms of the data calendar this week, not much of note after last week's feast. We return to a famine type scenario. We get factory orders today, Monday, and then we get balance of trade and ISM services on Tuesday. We'll also hear from Caterpillar and AMD in terms of earnings, and also tonight we will hear from Palantir, the tech darling. We'll see how that report is received. I have posted a video to the Tickmill blog covering my thoughts on Palantir, and then on Thursday, obviously, we'll get jobless claims as the next input of note, especially given those revisions that we saw on Friday from the NFPs. The long gamma environment has ended now, and the gamma flip moved off its peak. Last week, we were talking about that 6,400 level as a key level. We peaked at 64.27, the current all-time highs. The S&P was never able to achieve a close over that level. So to start this week, gamma will be in a negative environment, which will help with intraday volatility, as dealers will be positioned to actually chase moves instead of working against the moves. So for now, it's no longer a case of buy the dip and sell the rip. So you want to adjust your trading accordingly, and certainly be thinking about your stop size and positioning, because dealers will chase moves in whichever direction the market starts to move in, hence creating momentum. And so you certainly want to be cognizant of that environment. In terms of the market condition, we are one time framing down now on the daily time frame. 63.11. Weekly, we're in a balanced environment, 64.51 to the upside, 62.24 to the downside, and monthly we remain to the upside. One time frame, we up 62.27. So in terms of the technical structure, obviously last week we made a new all-time high and then closed down on the week. We actually closed below the volume weighted average price on a 5-week look back, which is essentially a key reversal pattern. So if we take out Friday's lows, then we can be expected to move to the downside, with that momentum being driven also by the fact that, like I say, market makers are now going to be in a position where they chase the move as opposed to trying to fade it. And we have that VIX shock. I talked about this last week in terms of the VIX and that August, well, the end of July being since 1990 really has been a pivotal point for the VIX and tends to see a surge in volatility into August and September, and that certainly is what developed on Friday. And we are seeing a pullback, obviously, now in the VIX this morning, but I would anticipate that we're going to see that grind higher this week. Certainly, we also have the tariff headlines coming out. We have Trump in a position now where he can replace one of the Fed governors, and so will that create a shadow Fed chair, so to speak? And that's going to be a key input this week for the markets. And so you want to be paying attention to the wires for that announcement. So in terms of the technical structure, like I say, we've got that key reversal on the weekly time frame. 63.45 is 63.24 on the weekly time frame now is that volume weighted average price flip point. So if we can get a close on the weekly time frame above there, then that will flip momentum bullish again. But as long as we remain below there, we are thinking about a further move to the downside. On the daily time frame, 63.45 is the 5-period volume weighted average price. Look back there. So the momentum below that 64, let's say 64. 25 to 64.35 area is going to keep us pegged to the downside at this stage. But if we can get closes above those key levels, then that will flip momentum bullish again. Let's move to the intraday chart and look at the technical setup for the week. Before I do that, actually, I must say 6400 is the implied volatility weekly range resistance, and 6130 is the implied volatility weekly range support. Keep those levels in mind. They'll be key this week. So from a technical perspective on the intraday timeframes, as we start the week off, like I say, I'm using a 62.20 to 62.30 as the bull bear zone for the week. And I'm anticipating that we could get that setup develop, or at least a test of that bull bear zone, probably into the latter part of the week. But for now, I'm looking at any pullbacks today that take us back into the 62.80 area, which is the halfway back and the volume weighted average price from the open last night. We have seen obviously a little bit of grind higher here, probably some profit taking. But any pullbacks into this 62.80, I'm looking for us to find bullish reversal patterns there to engage on the long side. And then we're going to target a move up to test that weekly projected range resistance at the 6400 handle. From there, I become bearish again. I'll be looking for bearish reversal patterns to engage on the short side. And ultimately, I will look for us to test this 62.20 to 62.30 area, where once again, tactically and certainly intra-week, there will be opportunities to trade that. I'd potentially trade that area from the long side should we see buyers emerge there. And I anticipate then that we can get back up into this 63.20, 63.30 zone as potential resistance then, and we could see another leg to the downside. However, if we do not find support back into this 62.80 zone, then we could get an early test of that 62.20, 62.30 area. Again, I'm a buyer there if we get confirmation bullish reversal patterns, and we'll be looking for the same upside objectives. My sense is now, as we head into August, we can see volatility spikes, obviously, as we saw on Friday. But I think we're likely going to move into a more range-bound trading environment. So certainly the weekly range resistance 6400 is going to be a key area. If we don't find support at 62.20, 62.30, then we're going to look for a test of the weekly projected range support down to the what do we have there? 61.30 area. And again, I will be watching for bullish reversal patterns there to engage on the long side. same idea, playing for a tactical bounce, and we can think about retesting Friday's lows at 62.30s. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.